Hi guys, thanks for tuning in to another episode of Nuggets News. Well, what a huge week. The Fed have started increasing their balance sheet again. We've got so much macro news and crypto news to get through. We do welcome 700 new subscribers this week, so thanks so much for joining us on this journey. And I just want to thank everyone for voting for us in the best crypto podcast globally. To get in the top 10 is a pretty amazing effort. For those that don't know, every one of our YouTube episodes and a few extra episodes get turned into podcast, Nuggets News, Crypto Podcast, if you prefer listening to them that way. So into the local news, where Martin and I did our detailed monthly update on the Australian housing market and economy, if you do want to tune into that. But a few things I did want to touch on. Australia slipping to 93rd in terms of economic complexity, and this is something that I outlined in our documentary. And to fall down that list 20 spots in the past 10 years, it's really a sign of all those things that we've discussed, that our economy is just not creating those high-paying, high-skilled jobs when you look at the countries that we're surrounded by in that list. And I'm not sure if you're a fan of the block or not, but Scotty Cam has been appointed as the National Careers Ambassador. So look, are we just way too focused on building and construction, the property market? I'd love to see, a range of other jobs being the focus. And yes, trades can be a fantastic, you can start your own business, work for someone else and make a good lifestyle for yourself. But at the moment, we've got too many tradies and not enough construction going on for the most part. So let me know what you think of Scotty Cam being in charge of National Careers Ambassador there. Now, even Rwanda here are now making their own smartphones. So this is Africa's first, and these countries are the next China, is the way that I think of it. They're starting to, have their own industries developing, whether it be smartphones, microprocessors. It's really fantastic to see. And this dragged, millions or billions of people out of the lower class into the middle class in China. And it really is that hope that we can see that come about in India and Africa. So great to see them with low-cost smartphones, probably taking market share off Apple and the likes. Now, Tim Cook has caved to pressures from China and removed a police tracking app that the Hong Kong protesters were using. So it's funny to see how this trade war and conflict is really affecting different businesses and how much power the big tech companies have these days. 40% of Hong Kongers wanting to flee the city. Those protests have heated up. We've seen more deaths this week. Businesses suffering, as I've spoken about, and this is probably going to lead to a recession as people don't go out and spend, and tourism really suffers when these things start to happen. Now, we've heard about the face masks in Hong Kong and the ID, those privacy issues. One of the things that isn't spoken about a lot is that in America, I believe this is nationwide, not just New York, a lot of properties are owned by trusts or LLCs, so you don't have to put it in the individual's names. And all this is set to be exposed under a new housing law. So we've seen a lot of money laundering in the property market. It was rampant in Australia if you look at the documentary we made, Canada and the US as well. So very interesting to see what's going to come out of this now that they're no longer allowed to be anonymous, the owners behind all these apartments and high cost real estate in New York. Now, the big news this week was QE4 beginning in some form or another. Some people saying that this is not QE, but the fact is that the Fed are now committed to buying $60 billion a month. Their balance sheet is increasing, and yet they're telling us that no, it's not QE. So you guys know the track record of the Fed and other central bankers. It's almost like you do the opposite of whatever they're telling you, and you're going to get a better result. Trump also coming out and saying that phase 1 of this China deal has been reached. We're then working on phase 2, and phase 3 and 4 are going to take a little while. So I'm not really sure if this is anything different other than a bit of a media stunt, but the markets certainly liked it initially. A bit of a relief rally, I think, is what we saw. And we know all the algorithms these days that are watching Trump's Twitter account. Global freight is now worse than the 2008 financial crisis. We know the manufacturing space is in a recession globally. And one point that I just wanted to add that's a little bit different, we've spoken about the opioid addiction and that epidemic in America that's actually affecting the economy and the unemployment rate. Sesame Street introducing a character to educate the young about opioid addicted parents because it's so rampant in the US. This is one of the articles that I just read and thought, sometimes fact is stranger than fiction, the world we're living in, when this is something that needs to be done in children's television. But anyway, over to the UK, where that credit impulse that Martin North and I talk about a lot, longest contraction now since the early 90s. So with the debt-based economic model, not only does it have to be growing, but it actually has to be accelerating and expanding. So when we have these contractions, this is what dries up the liquidity, stalls the economy, leads to deflation, which central banks hate, and that's when they need to start printing more money to keep everything going again. So the US Treasury market, you can get some of the highest yields in the world still. You know, a lot of people would kill for 2.1% when the rest of the world is basically zero or negative. So that's the lowest ever. I believe that is going to continue to go lower. The US isn't more special than other countries around the world, particularly when you consider that Greece now has negative yielding debt. So the high interest rates are meant to represent risk. So, you know, how on earth is Greece a better bet than the US? It just doesn't make any sense. Greece should be paying 7 or 9% because it's so risky to lend the money. Yet you can go to the US and get 2%, but in Greece it's negative. And that's basically because of the ECB, the European Central Bank, and their bond buying programs. They're just pushing bonds further and further into this bubble where prices are going up and yields are going down. Similar story in Germany with negative interest rates, where they're now being passed on to more and more savers. So when this initially came out, people said, it's only with accounts over $1 million. It's just the rich. And now it's down to 100,000 euros. Maybe next month or the one after, it's down to $10,000 and then $1,000. Eventually, within a year or two, everyone with a savings account is going to be penalized due to these negative interest rates. This is a really great chart from Peak Prosperity. These guys do some fantastic work. And this was the percent of returns from trading hours when the stock market's open versus after hours trading. And after hours is more the top end of town, the professionals that get access to certain trading types and markets after hours, whereas you and I can only trade our shares in our account, when the market is open through the regular brokers. So look at those returns, 570% after hours, and since the year 93, the market has been flat in actual trading hours. So again, it's just the inequality gap. Those with the extra privileges have seen the majority of those gains. Now, the corporate bond market's in a lot of trouble because of these negative interest rates, manufacturing slowing down, too much debt, and the pension funds really relied on a lot of these types of bonds to get those high yields. So more and more pensions are being shut down. General Electric is the latest one to have to end some of their pension plans. So those people that work their whole life and were promised retirement are no longer going to get that. And we're going to see that in more and more countries and more businesses around the world, because there's no such thing as a free lunch. Now, this is why we say it's so important to get a financial education, take care of your own nest egg if you can. If you can take advantage of that deal we've got with New Brighton Capital and set up a self-managed super, or even just do the free consultation to see if it is for you, start managing your own wealth and set up that self-managed super with some gold, some crypto, defensive assets if you think we've got some tough times ahead. But if we get more of that money printing, hey, maybe stocks keep going higher, and that's something that I'll continue to talk about. In the gold market, we saw Warren Buffett come out and state that paper money systems always wind up collapsed and in chaos. So it's pretty funny that he's been, a huge doomsayer of Bitcoin. He hates it, and yet he's saying that fiat currencies are going to collapse. So maybe he's a bit more of an advocate than gold. He used to be more bullish on silver, and then there's theories out there about why he said that precious metals are no longer his cup of tea. But interesting statement from him there at a time when we continue to see record inflows into those gold ETFs. So these days you've got a lot of different options. How to get exposure to gold. Our ETFs are one of them. Members from now on will be getting our premium gold reports. So the top 10 ASX stocks, some fundamental analysis. So many people asking me, how to play gold. We've done a lot of free content around that, but we have partnered up with a mining engineer now, and we'll be producing reports about gold stocks, silver stocks, ETFs. A lot of people have had some different requests around dividends, stocks. So yeah, really cool to see people taking interest in these other assets, these hard monies. We also saw Perth Mint, Australia's largest mint. This is government owned by the Western Australian government, come out and issue their gold token. So on Ethereum, obviously we've been big supporters of Ainsley Bullion. They've got a gold and silver token. They're not owned by government, so some people are saying that's a good or bad thing here. But either way, awesome to see Perth Mint get involved, and I'll try and get them on the channel for a bit of an interview as well. The final thing I want to mention here was the dynamic with Russia. So Russian oligarchs launching a palladium-backed coin and all these different assets. Once this space continues to grow, all of a sudden, why would you invest in an ETF if you're not sure they got the gold there? Or why would you trust the US who say they've got gold in Fort Knox? So many more investors and funds will be able to use these blockchain-based, regularly audited, this transparency, and it's no longer a case of knowing whether or not the gold is there. The US haven't had Fort Knox audited properly in decades. So fantastic to see where this space goes, and more people can get easier access to precious metals. Another thing we've seen being tokenized a lot lately is different games and sports, particularly the future revenue streams of sports players we spoke about last week, but the Sacramento Kings to reward fans with different loyalty tokens. So this is a bit of fun. I'm going to do an entire episode about this, because once you start rewarding people for getting to the game early or giving discounts on, food and drink, people can earn tokens by doing little tasks. Once we get into that virtual reality, augmented reality world, they can find gift vouchers at the stadium. So really awesome where this is all going. I've done a whole week about the gaming space and security tokens, the way that all these things are going to be tokenized. But Swarm, another one of my top projects in the STO space that I've spoken about before, finally launching their services for digitizing assets. Swarm do have their own token and their own protocol as well. So another one I'd love to get on the channel now that they have launched. Gods Unchained was one of my best tokens in the gaming space, one of the best projects, I should say. And they took this opportunity of Blizzard pushing back and banning one of the players because of his beliefs to do with what's going on with Hong Kong at the moment. So reimbursing all his lost winnings and giving him a ticket to their next tournament. These guys really played this well. They got a lot of viral coverage, and I think it's a great project. So it's not the first time we've seen sports players this week being pushed into the spotlight for all the wrong reasons because of their beliefs. So the SEC cracking down on Telegram, who had a $1.7 billion token sale, was the biggest news, I believe, this week. So that Gram token, this one was one that I was never really a fan of. It definitely falls into the scale of the more centralized projects, and we've got that many of them now that the space is just so competitive. I continue to talk about this, and that's why people are now seeing the importance of decentralization, because more and more of these projects are just a Me Too project. So yeah, investors going to get refunded. What is going to go on here? Let's wait to see how this one unfolds after they have halted that token issuance. Now, Libra is the other one that's been in the spotlight. Centralized project. Everything that we just spoke about then applies. But Visa, eBay, Stripe, MasterCard, a number of others now have abandoned that Libra project. Look, I did videos about this. I didn't think it was going to get off the ground anytime soon. The pushback that this has received has been crazy. And not only that, but behind the scenes. So this was a letter that some of the founding members received from Congress. If you take this on, you can expect a high level of scrutiny from regulators, not only on your Libra-related payment activities, but all your payment activities. So this is a threat. If you work with them, we are going to be monitoring everything you do, and it's going to be scrutinized. So no surprise that a number of businesses have got cold feet around this, and Congress are really getting defensive of who controls the money. Facebook also being sued over copying a similar logo here. So mobile banking app, what was the name of this one here? The Calibra logo being copied from, is it Current, the name of this app, guys? If you've used this one, let me know. But yeah, pretty much a straight copy there. So look, Mark Zuckerberg's going in front of Congress again soon, and he is going to have a lot to answer for. So Ripple have fused together their different products, XRapid, XVIA, XCurrent. Check out that interview we did with Sam, but they all rolled into one RippleNet now. A couple of good announcements for Ripple. They've partnered with Finabler, which is a project that's working with Samsung in the international payment space. Bank of America looking to hire someone dedicated to working on Ripple. This one went crazy in the XRP community this week. So are the banks finally setting up to use XRP token? Let me know what you think below. But what I continue to see is a lot of these banks still experimenting with a number of blockchains. So Commerce Bank, Alpha Bank, R3 have launched another platform called Marco Polo for cross-border payments. This is a private blockchain distributed ledger. We've already got Bank of America using this or trialing this. So the banks are experimenting with this payment technology. I'm not sure they've committed to any one blockchain yet. We also see Coinbase getting that e-money license in Ireland, so expanding their European footprint. Coinbase are now paying interest on deposits and they've got a money license. So these exchanges are turning into banks. And when they've got their own stable coin, they're now competing with currencies around the world. So this battle, it started off with Tether and stable coins, but it's really heating up now. What is money? Should governments issue it? Can cryptocurrencies be money? Can exchanges launch their own stable coins? Is this going to compete with sovereign currencies? So crypto debit card firm CryptoPay launching UK bank transfers with the British pound, another case of using these ledgers. A French state-owned bank joining the Lightning Network with $8 million startup funding. So the Lightning Network, if all the banks run their own nodes, I believe in future the Lightning Network is another option for payments. But, don't forget Bitfinex was the first one. And I actually think it's a lot of these other projects that are attacking Tether. So this lawsuit is pretty crazy. The defendant claiming $1 trillion, in damages for everything that Tether and Bitfinex have done over the years for himself and others. So I'm not sure. The judge has thrown out a lot of those Bitfinex lawsuits lately. I think this one's going to get thrown out as well. Not a lot of basis, in fact, if you ask me. But Binance launching their peer-to-peer trading in China, saying that this is another on-ramp. Now, obviously, crypto is pretty much banned in China. It's in the shadows or in the grey markets. And WeChat, our Alipay, coming out later and saying that no, this is not allowed. But if you've read a lot of articles this week, it's very hard to stop. A place that has 1 billion people, talking code words. How do you police this? So CZ shouldn't have announced it publicly. It's probably going to get more attention, unwanted, that he shouldn't have got for Binance and whatnot. But if you're in China, let me know, because I still think that this is going to be very freely accessible, and it is going to be just another one of those on-ramps in the sort of shadows that people are able to use. Now, sticking to Asia here, where Power Ledger have signed another 8-month trial over in Malaysia. That interview is dropping soon, so I won't talk about that one too much today. We've seen Insular, another project that I covered very early on, doing a number of things in the traceability business space. They've rebranded to Insular from INS World, but collaborations with Microsoft, Oracle, and InnoSwiss. So very great to see that before mainnet launch coming up soon. It's actually one that I continue to hold a little bit of. Another big upgrade coming is EOS. So everyone's talking about Ethereum 2.0, but not to be outdone, we've got EOS 2.0, we've got Neo 3.0. So I'm sure we're going to see something claim 4.0 soon. That's just the way it is in this space. But improving security, developer tools, performance. It's all about who's got the apps and who's got the users. EOS is right up there in terms of active dApps and users. Tron's another one that seems to get in the top 2 or 3 very often, but this research shown that the Tron is overrun with dApp bots and a lot of fake activity, which probably doesn't surprise too many of you. Now, Olga, the prediction markets, one of my favorite projects, they've announced their future versions, iterations, and upgrades, and they're going for the Betfair style interface where people can make their bets and see the odds. This can all be embedded in your browser once you've got that MetaMask extension, or the Engine wallet, Trust wallet. All these different native Web3 apps are going to allow you to bet straight from your Ethereum wallet with DAI stablecoin. So really cool to see this. I know plenty of people are excited to use that, and gambling's massive in Australia and globally. Chainlink is the next bit of news we've got here, and they've had a massive week. So many announcements, driving demand for enterprise smart contracts using that trusted computation framework. So iExec, Golem, a lot of these decentralized computing frameworks are starting to work with these corporations and businesses, but the oracles on Chainlink have become extremely popular. They've got a number of partnerships lately. We see the Ethereum Enterprise Alliance rolling out their reward token system. Again, Microsoft, Intel, starting to see the value in all this technology, and it's the public Ethereum chain that people are going to want to use eventually. So Ernst & Young revealing their radical plan to get major businesses using the public Ethereum blockchain. This was always the way I thought it was going to play out long term once people had experimented with private forks of the Ethereum blockchain. We see Dex Freight, MakerDAO, and Centrifuge coming together for this pilot for the multi-trillion-dollar logistics industry with DeFi. Absolutely awesome to see all this stuff come together for those little startup projects like Maker that we've followed since the beginning. And this week at DevCon, Maker announced the launch of their multi-collateral DAI. So it won't just be backed by Ethereum, it's going to be backed by a range of coins. The coins that are going to back the system are going to perform incredibly well price-wise because there's going to be more demand for them. Just like we've seen 2% of all ETH locked up, we're going to see a lot of tokens be locked up in this multi-DAI collateral system. And if you want to know what they are, I've done a video on this in our learning units in our members area. So Ethereum was declared a commodity by the new CFTC chairman. There was something that we'd always thought was the case. Bitcoin and Ethereum have got a lot more regulatory clarity, and he believes we're going to see Ether derivatives, futures, and maybe that ETF soon. So that's going to be fantastic for just the maturity of Ethereum going forward. Vitalik this week stating that sharding is not going to break DeFi composability. So sharding the network into smaller pieces is one of the scaling iterations that is on the roadmap, and announcing that that's going to be out as soon as 2020 for the first phase of sharding, which is very, very cool, along with all the other scaling techniques going on Ethereum. Joe Lubin announcing that he wants 1 million developers on Ethereum. So those numbers being thrown around, 200,000, 500,000, it's very hard to prove that if you take, GitHub or, truffle downloads or whatnot. But either way, we know that Ethereum has got at least 4 or 5 times more developers than even Bitcoin. So when you've got those developers, there's a lot of good stuff happening. And in terms of Bitcoin development, Taproot, Schnorr, a number of other things, Dandelion we've spoken about, going to improve scalability, efficiency, but also privacy. So I think that this is going to be fantastic. It's going to be a soft fork, hopefully, so we don't have to hard fork the network and risk another division of the community. But privacy on the Ethereum main chain it's going to be something that's not going to rub regulators up the right way, and I've done videos about that, but very important. So this week, the IRS put out some information around hard forks and saying that they create a taxable event. Now, I believe that this is pretty ridiculous. There's been something like 50 Bitcoin hard forks if you go and look them all up. And how on earth are you even able to claim them? A lot of exchanges don't give them to you if you've got your coins on an exchange. If you're holding your coins yourself like you should be, you've got to find a wallet for that coin to claim your coins with a private key. And all of these forks are pretty dodgy, or you don't know if they're scams. So who's going to plug in their private key to a random wallet they've downloaded to claim a coin that's not really worth anything? Who knows what the actual price is just because that's the price on CoinMarketCap. So how are you meant to pay your tax around this? It just does not make sense. I'm not sure if the IRS are going to change their stance on this, but I just don't believe that anyone can do a fork and tell you it's got a price and create a taxable event. It just does not work in the real world. Now, this week, the SEC also rejected that Bitwise ETF. Bitwise thought that they were closer than ever, but it appears to be not the case. The US continue to say how open they are to innovation, but they're just too concerned about, what happens in some of these unregulated markets in terms of price manipulation. Now, Grayscale did see a doubling of institutional interest in Q2 this year. So a lot of people are investing with them. They've got a range of products in terms of altcoins and their Bitcoin fund. Those flows are increasing. We've got BitGo insuring a number of custody solutions now, including Bitstamp, one of the oldest and trusted exchanges. So more and more people don't need the ETF to get quality, secure, reliable exposure to Bitcoin. Now, this week's technical analysis is brought to you by eToro. So these guys, we've got a link below to get you a deposit bonus, $0 fee trading. One of the questions we often get is, how do we trade, ETFs, or how do I short the stock market? And it's very hard to do, particularly in Australia. It's $20 a trade with a lot of the banks. So, if you're interested in getting exposure to ETFs, the stock market, use that link below, get a deposit bonus. For members, we've got an even better bonus coming. If you don't want to trade on leverage and you just want to hold these, $0 fees, and hold them and use them as an investment longer term. So let me know what you guys think about eToro. Have you downloaded that app? Get that deposit bonus. Let me know how you find it. And very thankful for eToro sponsoring the channel. Really professional brand that we're happy to be working with. Finally, they've got that practice account. So another thing we get asked a lot about it is, do we have a virtual portfolio, or can I practice my trading and margin trading? So use that virtual portfolio to get your practice in. Okay, into the technical analysis. So last week we were looking at these cycle brackets and seeing if we could get a continuation higher, and everyone's really bearish. If we just bring up the 200-day moving average in black here, you can see where we popped our head above a couple of times this week and we got that big rejection. But when we step back and we look at the cycle brackets, we bottomed to the day, we've gone up for the majority of the length of that bracket, and now we're pulling back. So as of tomorrow, if we're going to get a push up, that's the time to do it. If we break down early, that weakness, I believe, is going to last out until around the 30th of October. But the story really was that 200-day moving average on the daily time frame. Zooming out to the weekly, we've now had 3 bounces on the 100-week moving average, and rejected there from our EMAs that we use, the 12 and 26 period. So we're in between a rock and a hard place. Bitcoin has had a nice deep retracement to the tune of 30 or 40%, as we see commonly in bull markets. Personally, I believe that we went too hard too fast. We really went parabolic. We're not used to seeing that coming out of the bear market. So we need that deeper, longer retrace. We're still up a long way from where we were at the start of the year. If we zoom into the 4 hour, let's get that back on auto. Let's go back up to BIMX, which has got better volume. We can see there where we had that break out of the descending triangle. Good volume, everything looked pretty good, and then we broke above, which was that 200-day moving average, and we got smacked down on big volume. So what we're seeing now is this a retest of the triangle, and then we're going to push off again, or we're going to head down lower and break down below those old lows of 7.7. So the next levels that we are eyeing off are down around that 7.2, 7,000 there. If we break down below there, I think a lot of people would be happy to get Bitcoin at 6,000 or 5.5 would be the next support levels. Either way, I don't think that this is bearish. As I said, it's just a case of getting exponential, going too far, too fast, and we now need that nice, healthy retracement. Nothing's really changed for me long term. The Fed have started increasing their balance sheet and printing money. Everything is heading in the right direction. So look, I'm a happy hodler at this stage. There's been some fantastic trading opportunities on Ethereum and those altcoin indexes over at FTX. If you want more information on anything we do, guys, head over to nuggetsnews.com.au. Otherwise, thanks for tuning in. Smash that like button, subscribe if you haven't already, share these videos around, and we'll chat to you again soon. Cheers.